Welcome to the video about accounting cycle. An accounting cycle starts with the transactions and it ends when the books of accounts are closed. At first, financial transaction starts the process. Business transactions create source documents, which are proof of transactions. Different transactions create different documents such as canceled checks, supply invoice, cash receipt voucher, cash payment voucher, employee time cards, purchase orders, and other documents. At this step of accounting cycle, accountant must collect source documents and keep them safely. The next step of accounting cycle is journal entries. After collecting data, we record the entries into the books of accounts. Each transaction is transferred to the general journal in chronological order. Then journal entries are transferred to the general ledger accounts, such as cash, office supplies, accounts payable, and so on. After all accounts are transferred, we can derive the balances of each account. So, how much cash do we have at the end of the year? As shown in the ledger above, the company has $2,430 at the end of the period. There is another type of ledger, which we call subsidiary ledger. GL accounts payable may be made up of subsidiary accounts such as accounts payable supplier A, accounts payable supplier B, accounts payable supplier C, and others. The next step of accounting cycle is adjusting entries. Adjusting entries are made at the end of the period to correct accounts for deferrals and accruals. The main purpose is to match incomes and expenses. An adjusting entry always involves either income or expense account. Here we'll pass adjusting entries of the company by acknowledging supplies expense, interest expense, depreciation expense, rent expense, service revenue. The next step of accounting cycle is to calculate adjusted trial balance. An adjusted trial balance is a list of balances of ledger accounts which created after preparation of adjusting entries. Adjusted trial balance contains balances of revenues and expenses, assets, liabilities, and equities. At the next step, we prepare financial statements, which represent financial performance, financial position of a business, and how this position changed over time. There are following components of financial statements, such as income statement, balance sheet, statement of cash flows, statement of changes in equity, notes, and other disclosures. I will tell you about every component at the next videos. The next step of accounting cycle is closing the book. Closing entries are journal entries made at the end of an accounting period, which transfer the balances of temporary accounts to permanent accounts. Closing entries are based on the account balances in an adjusted trial balance. Temporary accounts include revenue, income and gain accounts, expense and loss accounts, dividend, drawings and withdrawal accounts, and income summary account. It is temporary account which facilitates the closing process. Let's look to the closing entries via an example. We close all temporary accounts shown in adjusted trial balance. The first, we close service revenue account by debiting service revenue and crediting income summary account. At the second, we close all expenses and losses debiting income summary. And at last, income summary account is closed, which balance is difference between two previous closing entries. In this case, 55,000 and 600 minus 52,250. It is 3,350. We close to retained earnings account. The last step of an accounting cycle is to prepare post-closing trial balance. Since the closing entries are transferred the balances of temporary accounts to the retained earning account, the new balances of temporary accounts are zero and therefore they are not listed on the post-closing trial balance. All other accounts are listed. The purpose of a post-closing trial balance is to be sure that sum of debits equals the sum of credits before starts a new accounting period. This is the end of the accounting cycle. In the next accounting period, the accounting cycle will be repeated again starting from financial transactions. Thank you for your attention. Goodbye. It is the end of my video.